following is a presentation of TFNN.
11 Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 3rd. How about that, folks? We're already into March. March 3rd, marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a great, fantastic weekend. Let's go look at one of our tools. This is a tool I call Use Wisely Your Power of Choice. You know, of all the powers we possess, you and I, our greatest power is the power of choice. Right now, right this very second, we are the sum total of all of our choices. The power of choice is what gives us our ability to create who it is that we've become. Every choice we make forms a building block. Every act, every word, every decision plays a role in who we are. We're free to choose whether it be the food we eat or how about our exercise routine. I mean, these are two things that certainly form the body we have. You know, whether it be the clothes we wear, the peer groups we participate in, the books we read, every choice we make forms who we are. So therefore, I got to start the Monday morning question off with this. What choices are you going to make today? In fact, what choices have you already made today? Are those choices providing you with your outcome? If not, make another choice because we are the master of our own destiny, and therefore, we must choose wisely. You know, folks, not what we have, but what we use. Not what we see, but what we choose. These are the things that mar or bless the sum of human happiness. Concentrate on finding your goal, then concentrate on reaching it. And always, and I do mean always, shoot for the moon, because if you miss, you'll still be heading for the stars. For the next 2 hours, it's my honor to be responsible for your care and guidance and protection. This is my choice. Let's go check out the choices in the markets out here. Right now, we've got Dow futures off 121 points. They're trading out at 16,185. S&P futures down 15 points. They're trading out at 1842.75. NASDAQ futures off 30 points, trading at 36.64. Russell 2000 down about 13 points, trading at 11.68. King dollar up 16-17 ticks, trading at 79.89. Goldilocks up 25 bucks. Silver up 23 cents. Light sweet crude up $1.42. It's traded at 104.01. That was one of our original price targets out there. We'll certainly take a look at all of these stock charts and anything else that you'd like. All you have to do is give us a call at 877-927-6648. Be happy to take your call, look at your stock chart, do whatever I can to assist you. A quick peek around the globe here. DAX in Germany off nearly 3% right now, down 279 points. The FTSE off 1 6/10%. It's off 108 points out here. The Nikkei was down 1 2/10%, down 188. The Hang Seng off 336 points. The Shanghai hanging in there, though, up 19 points, about 1 full percentage point. So, where's our markets? Well, if you take a look at the futures, we're not down the same 3% that we're looking at in Germany, nor the same 1.5% that we're looking at in the UK out here. So let's begin by taking a look at the ES Mini out here. We're looking at a 30-minute chart. Why a 30-minute chart? Well, you know, what it does show here shows that now, you know, we had the markets moving higher. They're moving higher quite a bit up until about, 12 noon, maybe a little bit later than that. I guess right around 2 o'clock is when the first discussions, rumors, news with regard to Russia, with regard to Putin taking some type of aggressive action inside the Ukraine. That went ahead and that sent the futures market, sent the markets giving back. It went from positive to negative in a couple of cases. And in this case here, we saw the ES Mini actually trade down into the 2:30 time frame. Went from, in a half an hour period of time, an hour period of time, really went from the 1866 range all the way down to 1845. That was a quick move. And then obviously, well, not obviously, I think he probably had some, well, let's just say that it went ahead and it made a retracement back. What kind of retracement back did it make? Let's just simply take a look at what we did here, what the market did from high to a low. There it is, sweet 786. You're just going to make one of those Fibonacci retracement numbers. So went from the highs, which came in at 12 noon, down to a low that was put in at 2:30 in the afternoon, goes ahead, makes a retracement. 1862 was the actual 0.786 retracement. It gets to 1862.50. In essence, as you know how the A to B equals CD patterns, if we take a look at those, if we go from the high down to a low swing point, then up to a high, you can see that what the ES Mini here has done is it made the 1 to 1.272 A to B equals CD. Did that here last night at about 8 p.m. Futures obviously opened up. They gapped down based on the news and everything that was coming out of the Ukraine out here, and it is a bit tense. So right now it's a war of words, and hopefully it doesn't get to anything more than a war of words. But the markets do not like uncertainty, and I have to say at this stage there is nothing but uncertainty out there when you take a look at the parties in play. Now, what the market was also doing at 8 o'clock in the evening, it was getting down into what? Into that oversold condition. And what we have seen since then, as you know, when we take a look at markets moving down into an oversold, overbought, moving up into an overbought condition, let's say it's moving up into an overbought condition, the most bullish thing that you can do, it's like getting, eating too large of a meal. In this case here, the most bullish thing would have been for a market to move sideways. Well, we're looking at the other side of the chart right now. We're looking at the bearish side with regard to the markets moving down and working off an oversold condition by just simply consolidating sideways. And that is all that we have seen take place thus far. In fact, you could really make the case out here that the consolidation at this stage that we ought to see here at a minimum is a break of about this much at a minimum, because really since last night's open, we've been consolidating sideways. We'll say the consolidation zone here, 1845, make it 1846 is the high, and let's say the low out here is 1836. So we got a 10-point consolidation that is going on. What that says, and I can't tell you which way the consolidation is going to break. What I can't tell you is 65% of the time, the consolidating patterns will go ahead and break in the direction that they came from. This case here, it's coming from the highs. But either way, we should see once we see this pattern here break, we should see a consolidation break of 10 points. If it breaks to the upside, you should see the market move up to about the 1850, 1855, 1856 level. 1856 will take you all the way back into the about the 4 o'clock close, 4:30 close, or 4:30 bar out here. Likewise, a break to the downside, and we'll take a look at a little bit longer-term chart here in a moment. A break to the downside says at a minimum you ought to see about 1825. So that's the consolidation pattern. That's what's going on inside the ES Mini. Let's go peek in on the Euro-Yen. Let's do it. Let's do that with the same time frame here. Give me a moment to move over to that chart out here, and then we'll come back. We'll take a look at these, just see if there's any kind of a difference out here. So as we take a look at the Euro, Japanese Yen, same kind of a pattern out here. We saw a gap down here at the open last night. It has been traveling, in actually less of really a consolidation pattern. This has really been moving, it's been working off that sold condition by moving sideways to slightly lower out here. And this looks like this is truly trending to the downside. Now, inside the Euro-Japanese Yen out here on a 30-minute basis, we can see where it formed a recent bottom. And it formed a recent bottom when it created this little hammer candle at 6 o'clock in the morning, and that was on February 27th. That was followed up 2 sessions later with a nice big bullish engulfing candle at 7 a.m. And that says that you should have good support at a price point of 138.78 out here. And that's really an area that we need to be watching, because when you close below a hammer candle, when you take out a hammer candle, if you're long, you're wrong. That's the expression I like to use. It's just an easy one, and that says that we would then see lower price. Where would that lower price take us to? Again, on a 30-minute chart here, and then we'll go take a look at the daily charts just to try to get a feel here. you'd have to say, boy, you'd almost, in this case here, you almost need to use the exact same candle. I don't like to do it, but sometimes you have to. The exact same candle as your B point as you would for your C, and that's the open last night here, and that's the session at 5:30. So that would say you'd be looking at a 1-to-1 A to B equals CD down at about the 138.50, maybe 138.07 area inside of the Euro Japanese yen. So that's what we've got going on here in the shorter term time frame. Now let's go take a look at the larger term time frame. Let's go take a look at some daily charts out here just to try to get a feel. Now let's start off by taking a look at the S&P futures out here. S&P futures obviously gapping down. Now if we take a look at the retracements here, and that retracement coming off of the low from February 5th. And that low out there is at 1732. So if we go from that low to the high that was put in on Friday, 1866.50, a dead cat bounce takes you into about the 1815 level. So no big deal. But what's the likely target on any kind of significant, I don't know whether they call it significant, on any kind of a pullback inside any market? It's the same thing on the daily charts as it is on the intraday charts when we take a look at it. And really your target area becomes your 0.618 retracement, 1784, to your 0.786 retracement level, 1760. So we need to be watching here. It's going to be volatile. And when it's going to be volatile, what we do know is as the market opens here, the thing to be watching for today is certainly going to be the VIX index, which did close below the 50-day exponential moving average. That's a nice bullish thing. However, today, if we see a close above the level of 1475, we'll call it right now. That's that 50-day exponential moving average. That's where carnage, that's where damage is done inside any kind of a market. So if the bulls are going to have their way out here, and quite frankly, before all these things started to unfold on Friday, between what took place over the weekend, we saw a market that was absolutely breaking out. If we take a look at when I use breaking out, if we take a look at the New York Stock Exchange, we'll just switch over here for a moment. What we did see, what we needed to see, what it did do was it got above that October 2007 level out here. Now, we're beginning the month with the New York Stock Exchange above the 2007 level out there. And so that means the entire month of March, maybe it travels lower, but at the end of March, if we do see price above 10,000, 387.17 out there, on a monthly basis, you'll have had a breakout of a really large consolidation. 6,000-point consolidation, a test of that area, and that would actually give it the freedom to move higher. Likewise, the problem here is because we did close above that. Was this a false break topside? And if that's the case, that's a real problem. Because when you break consolidations, you run the risk and you get back into them. You run the risk of running all the way back down to the bottom of that. So we get back from our first break here. Let's go take a look at Goldilocks. It's trading up $26 right now. Trade out at $13.47. Silver up 1% as well. Well, got gold is up 2% here. Silver up 23 cents. Trading at $21.47. Let's go see if it's cracked its resistance level. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-markets out here, moving to the upside, you know what you would expect. The ProShares Ultra VIX, it closed at 66.10. Right now it's trading out at 74 bucks out there. The gold miners, the 300% there, Nugget NUGT, with gold trading up, the miners doing well here. 47.41 is what it closed at. It's trading out at 51.68 out here. Other than gold and volatility, you've got Perion Networks, PERI is the ticker symbol. They were out with numbers here, generated revenues of 31 million versus 21. So a nice move there. That's a heck of a nice increase. That's about 30% or so. Net income 6.4 million, a doubling here versus 3. Not a full double. Well, let's see, 3. Yeah, no, not a full double at all. 6.4 million versus 3.6 out there. Nonetheless, it's trading up here. Last trade fired up at 13.74. They closed at about 12 bucks. You've got Jinko Solar Holdings, JKS is a ticker symbol. They too out with they too. How about that? I don't think that's not very good grammar out there. They are also out with numbers here. That is a China solar entity. It closed at 32.72. They're trading at 33.75. Leading the charge to the downside here this morning, Tesla. They closed at 244, trading down about $6 or so. Its last trade looks like fired off about 2.30 38.50 out here. Yandex, YNDX is the ticker symbol. They close at 37.50. They're trading at $34. Apple is down a bit here this morning. They're trading out right now at $5.23, so off about a little under $3. They closed at $5.26 last night. Let's go back and now let's take a look at gold, silver out here. Let's go see what's going on inside the commodities. So as we take a look at Goldilocks, trading out at 13.46.30 out here. Gold had formed a little key reversal session, bearish engulfing candle. That was on February 26th. The high there is 13.45.60. Bullish is closing above that. You close above that, that says you move up to at least the next level. Now, the next level here, combination of either the swing points, where we saw a reversal. That was back on October 28th. That high out there is 13.61.80. So you've really almost hit that level. So, closing above that then sends off the signal of moving up to the 13.80 range. 13.79.90 happens to be your 0.786 retracement from the highs here, and this is where I'm taking it, from the high of February 28th down to the low out here on December 31st. So that would be the target out here. We can't see that Goldilocks is above the 50-day exponential moving average. That is bullish. That right now happens to be the low of the session, which is right around the 1330-ish range out here. So let's keep our eyes on Goldilocks. Gold now looking more bullish at the moment than silver is. If we take a look at silver here on the day, on its daily chart, what it has run into, it's a daily chart. It's run into that trend line. No, that's the channel line. The red line here happens to be the downtrend channel. Whereas gold is above the 50-day exponential moving average, silver is not. 50-day exponential moving average on silver is $21.90. You're trading out at $21.50. Now, what silver's also done, which is kind of interesting here, it's really at an intersection of resistance. That intersection of resistance, if we just simply come off of the low just to form a trend line, and that is off of the February 3rd price of $19.06 here. And I'm using as my trend line. I happen to be using the low of February 13th. That's out at $20.12. Silver broke through that. Now what it's doing today, it's running in, it's testing that area as it should. Bullish would be getting both above that as well as the downtrend channel line out here. So that would say silver closing above, let's see, where can I kind of gauge this here? I would have to say closing, let's use $21.80, 90 cents, something like that. You would all of a sudden see, well, let's use the high of today. That would actually work. The high of today is $21.75. Sometimes it's really right in front of you. So $21.75. Well, what you really want to see silver do here from a bullish breakout is get above that 50-day exponential moving average. So that's really the number. How about that? I was right the first time. Shouldn't have doubted myself. $21.90 and a bit of maybe a couple more pennies added to that, and that would be very bullish with regard to silver. If we take a look at light sweet crude, and all of this right now is the fear-based trade, but I would have to say, just my observation of the parties involved here, there's more fear to come in the market, and once things start cascading, either north or south out here, sometimes it's hard to put the brakes on. In the case of light sweet crude now is trading at the 0.618 retracement. 104.22 is the number. The 0.618 retracement being the high that was put in here, that little shooting star candle from August 28, 2013. That's when we had light sweet crude trade up to 112.24 and all the way down to the lows that were recently put in here back in January 2014 at 91.24. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're up to the races. We got the Dow up 132 points, trade out at 16,188 out here. S&P off 13.5 points, trading at 1845 and change. Composite down 44 points, trading at 4263. Russell 2000 off 12 points, down 1%, trading out at 1171. Let's see here. Other than ProShares and gold stocks, we have anything to the upside out here. Lorillard, LO is the ticker symbol. That is up $1.73 right now, up about 3% out here. To the downside, Dover Corp, DOV is the ticker symbol. They're trading down 17% out here. I don't know if that's a new IPO or not. Google's off about $10. Splunk is splunking this morning, down 6% off $6. Kiwi PLC QIWI. Kiwi is the ticker symbol. They're off 13%. Tesla down $6 right now. It's $6 off 2.5% out here. Baidu off 2.5%. Let's go out to Lewis in Boston. Lewis, thanks for calling. Thanks for holding. How you doing this morning?
Good, Steve. How you doing?
Excellent. Thanks so much for asking. You have a nice weekend out there?
Yeah, it was a beautiful weekend. Kind of cold, like usual.
Excellent. You wanted to take a look at Rolls-Royce, I believe. Is that the...
Yeah, Rolls-Royce Holding, yes.
RYCEF, folks. That is the ticker symbol. Tell me what you're doing, how I can help you.
I'm not in it yet. I just read an article about it, and it got me interested in it. The high was $21, and the low was $16, and it's coming off bounce. And I think $19 is the resistance level. That's a gap in there. That's a gap in between that. So.
Yeah. Now, in the case of Rolls-Royce, what would be better for us? And I apologize, I don't have the feed here. Is getting I think it's traded on the London Exchange. I don't have the. I'm sorry.
It's traded on the pink sheet.
Oh, is it traded on the pink sheets? Wow.
Yeah.
Well, well, first of all, here's one of the problems that you've got. The highest volume day that we had out here recently was February 25th, 34,000 shares out there. You're basically going to, if you're going to invest in this, buy the car instead of stock. There's no liquidity here, so you're going to be trapped like a rat inside this if you want to get out. And if I just simply take a look at it, the stock actually sets up better using my Rhodes momentum indicators out here. And what I can tell you, what Rolls-Royce did here, what first popped up on my screen was the monthly chart. And on the monthly chart, Lewis, what this has here, it has one of my favorite reversal patterns out here. It's where price makes a higher high, does it on less relative strength, and then is confirmed with bearish candles out here. And that's exactly what took place on a monthly chart for Rolls-Royce. And let me get my crosshairs up here. Made the first high that we were taking a look at where it made the highest relative strength reading happened to be the month of May in 2013. And then what this equity does, it makes a higher high. The first signal opportunity for that pattern to complete happened to be in December. And it gets up to a price there of the actual high, closes at 2096, the high is 2109, and then the very next month makes a bearish engulfing candle. And then last month has a follow-through. So on a monthly chart, this is telling you to just simply beware. It's on a weekly chart. Now, I haven't done this here yet. The weekly chart, let's go take a look at the weekly chart, is in bearish mode altogether. I don't see stepping in front of this thing. That also has a price relative strength divergent pattern out here. And on the daily chart, let's see what we've got out here. The daily chart just telling you that there's just simply sellers in control. So if you were to go ahead and step into this, Lewis, what you really need to see is some kind of real sign of strength off the bottom, which you have not seen. And on this stock chart here, I don't know, that could be 5,000 shares, and that's nothing on a $16 stock. So in looking at this here, I don't see it.
No, it was sort of an article that I read that really got me interested in it.
It's just, I think it just means that it's an article for the most part here. But I from a technical standpoint, I can't see taking a ride on this stock chart. I can see taking a ride in the car though.
I know it's a game. Can you look for another one for me? FLT.
Yeah, sure. What? I'm sorry. What was the ticker symbol?
FLT.
FLT. Yep, I absolutely can. In a moment here, we'll type up FLT. Now, tell me what you're doing with this equity. FLT is the ticker symbol, folks. If you're following along with us home, that's FleetCor Technologies. Tell me what you're doing here and how I can assist you.
I would like to get into it.
Okay.
The chart looks really good on it.
All right. So we're taking a look at the FLT. If we take a look at this, it's made a high here on Thursday, February 27th, got up to 132.22, did it with 1.5 million shares. So I want to see if this thing took out its recent swing point. And I'm going back and just simply take a look at December 2nd out here, 928,000 1,000 shares, and as it got over that level, did it with 1.9 million shares. Okay, so that's pretty nice, that little breakout. Let's pull this back further. So what you've got here, this chart really looks a lot like the S&P 500. And what I'm referring to here is I'm coming back to October 9th. So this thing has broken a little bit of a consolidation pattern that it had, but it came in. Let me look at the weekly chart out here. So this is trading. I bet you if we go ahead and overlay the S&P 500 on this, you'll see this trading very similarly. If this thing, you're looking for an entry point, let's take a look at retracements. Now, what you want to do here is you want to be able to get the market going in the same direction as the equities here. And with all of the unrest overseas here right now, you might want to be patient. An ideal spot here for you to be able to come in on this equity on a pullback, you probably start taking a look at this around the 113.22-ish range. That's your 0.618 retracement here. Today, we'll have to look at it a little bit later on. That's what the daily chart is showing. Let me switch over and take a look at a weekly chart. So on a weekly chart, see if this thing took it out with volume. Yeah, this stock chart, this is way better than Rolls-Royce. So stay here, Lewis, okay? Because this is much better. In fact, December 6, 2013, that was the high, 4.7 million shares. Last week you got above it with 7.2 million shares out here. So you want to try to maybe time this. Let me see what kind of expansion this thing made here between its weekly swing points. Yeah, it made that 1.272 expansion, getting up to 130.07, a little bit higher than that. And so a pullback on this. Let's go back to it. So you got a nice chart here.
Let me ask you a question.
Yeah.
Real quickly. On January 27th of this year, on the weekly basis, the volume was 6,379,000, and it was on a down day.
January 27th on a weekly basis. So I need to, okay, let me go over the daily chart. So on January 27th, okay, I'm there.
Yeah.
Yeah.
No, January 21st, I'm sorry.
January 21st, okay. January 21st out here. Yeah, okay, I'm with you. Yep, so you got big volume to the downside, 2.7 million shares, yes.
Yes.
And your question there is, does that have you concerned, or?
Should I go on to my entry point? Is that on the high or on the low of that point to enter?
Well, if it's going to get down there, what you're really going to be basing on. So if you're waiting, then what you really want to do is just move over a couple of days to January 27th, where you were, because that's really your swing point low. And so what you really want to, if you're going to wait for this to come all the way back to that level, what you then want to do is you want to gauge it off of the volume coming into that session, which is 105.63 is the high, 101.48 is the low, and you'd like to see it come back there with less than 1.5 million shares. There's a little bit of a gap out here that took place, Lewis, that's at the low of the February 6th candle. And that's really what you should also be looking for. And that's got 1.7 million shares. And, the top of the candle session prior to that, which is 108.53, that might be an ideal entry point if it can pull back to that level. But you certainly want to see it doing that on some lighter volume out there.
Okay.
All righty?
Okay, that's good. Yeah.
Absolutely. Hey, thanks, you betcha. Thanks so much for calling. That was Lewis in Boston. That was Fleet Core Technologies, FLT is the ticker symbol. Let's go check out the currencies here. Let's go see what we've got going on inside the currency world. Let's start off by taking a look at the euro, U.S. dollar. Let's look at the daily chart out here. If we can find it, here's the daily chart. So we see as the euro U.S. dollar this session here today, just a sideways move, an inside bar compared to Friday's session. Now Friday we saw the euro U.S. dollar try to take out a resistance level. This has been a strong horizontal resistance area. That is at the this little red line going across my screen. We've got multiple reversal signals up here. We've got a bearish engulfing candle. That took place October 28th, right after that doji, the prior session before. Market moves down into the bottom of this rising price channel, which still has maintained the support level for the euro U.S. dollar. You saw that level also, that horizontal level, December 11th. We saw the euro move up to about 138.09. You get a little bearish engulfing candle that next session out here. So that is your area of horizontal resistance, and you can see that Friday it was stopped in its tracks. It also has a 2008 trend line. That's this black diagonal line coming across my screen. If the euro is going to truly break out, it's going to have to get up well above that area. It has not done, but it also has not been able to break to the downside. From my standpoint, trading the euro here has got very limited upside potential as we speak right now, but it also has some very limited downside potential. If you're going to be trading this, you got to be trading, in my opinion, you need to be trading this on an intraday chart, probably a 15-minute, 30-minute type chart out there. There's where you can see the different patterns inside of the euro. We take a look at that right here as we speak here right now. We see a big breakout session that occurred inside the euro at 5:30 on Friday morning. Big wide-ranging bar, moving it into the bought condition out there. Then went ahead and really just moved sideways for the day. Gap down here last night. Looks like this ought to be able to find support at the bottom of this breakout, which could easily be the 137.06 level. We just simply take a look at retracements here now from low to high. And again, it's a 30-minute chart for the euro-US dollar that we are paying attention to. And a little bearish engulfing candle right here up at the 2:30 time frame. And that was on Friday, 2:30 in the morning on Friday out there. So you can see it's made the 0.382 retracement, the normal dead cat bounce. Looks like it's really just trying to set up an A to B equals CD to the down and set up your next potential Gartley buy pattern. Again, we're looking at a shorter-term time frame. We're looking at a 30-minute chart. And that setup probably takes you into the 0.618 area. I'd have to say 137.11 to maybe 136.808. Just depends on the bar as the euro is moving down into that area, if in fact it does move down into that area, which will be your 0.618 retracement, a Gartley buy pattern, as well as a breakout session with some wide-ranging bars inside of the euro. Let's take a look at the other currency pairs out here. Let's go take a look at the U.S. dollar, Japanese yen, see what it is doing. Looks like it is now trying to go ahead and complete an A to B equals CD down. We're going to go ahead and get rid of this Gartley buy pattern out here that we had on the screen. At this stage, that is not correct. So it does look like the U.S. dollar, Japanese yen, at this moment is trying to form an A to B equals CD down. That ought to take it down to about $98.13. In fact, it could easily, if it starts to get some momentum to the downside, if it gets some momentum to the downside, this is actually looking more like $96.86, which would bring you all the way back here to the last swing point low back in October of 2013, October 25th, $96.93. And that is the pattern at the moment that appears to be unfolding inside the U.S. dollar, Japanese yen. Let's go check out the pound, see what it is doing. Great British pound, U.S. dollar. Again, on a weekly basis, this thing has had a very nice breakout. This is the currency pattern, in my opinion, that probably offers the best trading opportunities, because this thing has broken a very long-term consolidation pattern out here, and that says that we're going to see the Great British Pound trade around the $1.80 mark at some point in time here in the future, so long as it can stay above the consolidation area, which is about 164.76. That's a weekly chart. Let's go see what's going on in the daily chart here. In the daily chart, is not giving us any signals that it really wants to back off. Ideally, this would have been setting up, and it still could be setting up an A to B equals CD down, but it is just simply not backing off. Only made a 0.382 retracement on this very bearish pattern here. Here's a 3 drive to a top. Here's a 5-point reverse wave pattern out here, and it just simply is not backing off. Making the 0.382 retracement, that's just normal. So you get the Great British Pound, U.S. dollar above the 168.21 level out here, and it is going to continue its move topside, which it's already done on a weekly chart out there. That's what's going on inside the currency pairs. If we take a look at natural gas, let's go see what natural gas is doing here at the moment. You got natural gas trading out at $4.63 now on the monthly chart out here. Weekly chart, you just simply have, on the weekly chart, you've got big reversal signal, big bearish engulfing candle, key reversal session, all 9 yards. I think you got to go to, in the case of natural gas, which I am not trading here, it probably would behoove you, if you are trading, to go take a look at that seasonal charts. I don't know if it's called seasonalcharts.com out there. Just see what the seasonal pattern is in natural gas. It's now March. The deep freeze in the north ought to be over sometime soon, at least another month or two, right? 877-927-6648. Dow's off 125, S&P down 11. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, we've got the Dow's off 110, and the S&P is off 10. So let's kind of summarize this as far as what it is that we should be paying attention to by the end of today's trading session. Number one, we want to take a look at the New York Stock Exchange. Now, on Friday, on a daily, on a weekly, on a monthly basis, we did see the 2007 highs finally get pierced. A close above those levels that suggests a potential breakout forthcoming. And we'll really kind of more focus on the monthly chart here. So we've got obviously 31 days to go in the month. However, on a daily chart right now, and it's had nice momentum behind the move. The Bears would actually take control of the ball inside the New York Stock Exchange if we saw more than 1973, I believe it's 1974 or more net declining issues today on the NYSE. Right now we're at about 1350. So it is doable. It is doable. It is an objective that it can attain today. So that's one of the first things that you want to take a look at. With regard to volatility in the marketplace, the VIX certainly gapping up this morning. Let's go take a look at that, see where it is trading. You've got the VIX index right now. Now it's off of its session highs, off of the gap up. It's trading at 1562. Look, as long as it stays above that 1470, right now 1480 level out here, you're trading at 1562. That's where carnage inside the market can be done. That is always bearish when the VIX is above the 50-day exponential moving average. So that's the second thing that you would be taking a look at. Right now, we've got a one-day rate of change of more than 10%. Right now, you're at 11.5% out here. But we'll just take things one thing at a time with regard to whether or not the change in trend is taking place here as we speak. Of course, you get the VIX back below the 1479 level out here, and the bulls will truly be fending off the worries of war, or and it could be just a war of words out there. Look, folks, it's a war of words that creates uncertainty in the market as well out here. So those are two areas that we really want to be focused on and paying attention to. We know if I go back and take a look at where we began the session here this morning and take a look at the consolidation pattern, you can see price here inside the ES Mini. That's this left-hand chart here. That's that little consolidation. Oops, I didn't mean to grab that, but there's your little consolidation pattern. That price is traveling in. We still have 4 minutes left here in the session. Maybe all we're going to do, and that's a 10-point consolidation, albeit a small one. That is what it projects. You get a close above on a 30-minute chart, above 1847. On 1847, and a quarter, something with significance. That sets up the potential to at least move up, maybe even close the gap, or even move higher. I mean, that is one possibility. But nonetheless, right now, still just traveling in the consolidation. The other thing to be focused on or taking a look at the Euro-Japanese yen. And on a daily basis, it's not doing a whole lot. It actually has not taken out the low of an A to B equals CD, and that low would be the February 27th standpoint out here. But nonetheless, be very careful out there in your trading. If you are long this market, make sure that you've identified some stops in place, because you're starting to get some signals here of some problems. If you've never checked out Mastering Probability, today is a good day to do it, because I did a study. And it's a study you want to see out there, and it deals with all the different, or most of the major military conflicts and what their impact is on the stock market out there. So go to the homepage at TFNN.com, click on my name, Steve Rhodes, out there. You can sign up for Mastering Probability, 30-day unconditional money-back guarantee. You will not regret it. Right now, the Dow's off 112. S&P is down 10. NASDAQ Composite down 29 points. If you're off to start your day, have a terrific Monday, folks. Thanks so much for joining us. I look forward to seeing you in the morning, or maybe in about 10 minutes. Take care and have a great day. Bye-bye now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.